Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock price predictions, PLTR stock news, some Palantir stock analysis, and I will be going over a few misconceptions about Palantir Technologies. After that, we will talk about Sofi Technologies SOFI stock, where we will be determining if Sofi is a good buying opportunity right now, under what circumstances should you not purchase the stock, and lastly, we will go over a Sofi price target at the end of the video. Remember to go and press the like button right now for more PLTR stock news and Sofi stock analysis. Comment down below your one-year price targets for Palantir stock and Sofi stock. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. Companies create massive amounts of data on a daily basis, and the majority of this data is unstructured, which means that it cannot neatly fit onto a page in a reasonable format. Around 90% of data is in this unstructured state, which makes it very difficult for companies to use this data effectively. But then Palantir Technologies came along and solved this data analysis problem by identifying patterns in the data that will lead to informed and strategic decision making. Palantir's technology is so good that it's primarily used by the US government and their allies, which can be used on the battlefield. With Palantir achieving good results in the government sector, Palantir decided to enter into the private sector back in 2016 with their Foundry platform, and this is going to be their key to long-term success. By entering into the commercial markets, Palantir has grown their commercial revenues by 103% year over year, with much more growth projected to take place in the coming years. Palantir is also aggressively marketing their products to both commercial and government clients, so they spent over $150 million on sales and marketing, and this has paid off because Palantir brought in around 54 deals, with 51 of those deals being worth over $5 million. Palantir's technology is very expensive, but the technology is extremely useful to the organizations who purchase it, and once an organization becomes a client of Palantir, they normally maintain their clientship indefinitely. In total, Palantir has around 203 customers, with more than half of their revenues coming from the government sector, but their commercial revenues will eventually surpass their government revenues because the commercial side of their business has a much larger addressable market and it's more rapidly developing. I also want to add that Palantir is trusted by the US government, and for good reason, because Palantir has never had a security breach, which is why large enterprises and government institutions alike love their technology. Now, I do want to add that Palantir is not a profitable company due to their net loss. However, their net loss is shrinking substantially because of their growing commercial revenues. I also want to say that this stock is not for everyone because it does carry risk, and for investors that are either already overexposed to this stock or they have too many other risky single stocks in their portfolio, it may not be the best move to invest. The main risk from this company is that the company is trading at 25 times their sales, which means that investors have to be willing to wait for their sales to catch up to their valuation, which could take a while. However, if someone has a diversified portfolio that can handle some of the risk associated with this stock is amazing, and I love the company. It's undervalued in my opinion because it currently trades at around $20 per share, while the fair value price is $31 per share, which is what the stock should actually be trading at. On top of that, even though Palantir's products are expensive, I believe that they have a more superior product than many of their competitors. For the investors who invested into this company at their DPO, they are still up around 90% on their initial investment, which is absolutely amazing. However, there are still naysayers out there that talk very poorly about the company and stock, which I will address right now. Apparently, analysts think that Palantir is buying revenues from their SPAC investments, and what they mean by this is that Palantir is investing into companies that then in turn sign contracts with Palantir to use their technology for their Foundry for Builders program. And analysts are basically saying that this is not a true source of revenue because you are investing into companies which in turn sign contracts with you which give you free revenues. And they say that this is misleading on things such as their quarterly earnings report when they report commercial revenues. However, I adamantly disagree with this because according to Palantir, only 2% of their revenues were made this way, and 2% is barely anything. And on the flip side, Palantir is supposed to bring in $1.3 billion of free cash flow, not just revenue, by the end of 2025. So these SPAC investments barely make up anything according to their revenue or free cash flow, so I can totally discount this argument from analysts. If anything, investors and analysts should be very excited about Palantir investing into these SPAC companies, because even if one or two of them work out, Palantir will get an extremely impressive payday from it, which will then be passed on to their shareholders. And this is going to be great for investors and analysts if they're invested. However, the problem is that analysts are not invested into this stock, not a lot of hedge funds own this stock, and Wall Street is mainly against this stock for whatever reason. Because of Palantir's overall bad publicity from analysts and Wall Street, I would not be surprised if the stock went down to $15 per share. However, this does not mean that the company is doing bad. On the contrary, Palantir has posted impressive earnings reports for multiple quarters in a row, which shows strong growth in their revenues and a direction towards profitability. So if the stock does fall down between $15 to $17, I would simply just buy more, but I will keep my overall holdings below 5% of my overall portfolio, because that would be improper risk management if I overexpose myself to a single stock. Now let's talk about Sofi Technology stock, ticker symbol SOFI. While the overall stock market is consolidating near all-time highs, stocks like Palantir and Sofi are falling because these are both good growth stocks for long-term positions that already have some growth baked into them already, but they're still great holds because they hold great future promise. Financial technology stocks like Sofi and other fintech stocks are growing very quickly, but older companies like Visa, MasterCard, and American Express are still trying to hold on to their market caps, which will suppress the growth of these other smaller companies in some instances. The good thing is that many of these companies are unique, and I think Sofi is extremely unique when we compare them to companies like PayPal, Square, American Express, Visa, and MasterCard. With that being said, these older companies are still posting very strong results, and the younger companies are growing at an incredible rate, so the older ones are still trying to keep up with the innovation. In spite of this, Wall Street has found it appropriate to sell the heck out of them. Sofi has given up around 40% in just over a month's time, which gives investors like you and me a great opportunity to invest into a rapidly developing fintech company. If the Sofi stock price drops to $13 per share, I would double down on it, which would increase my holdings by twofold. And the reason I can do this is because I never overexpose myself to a single stock to begin with, so when that stock eventually pulls back, I have the opportunity to lower my average cost by doubling down on it without taking on additional risk. Another thing that investors should be aware of before they double down on a stock is that they need to look out for macroeconomic factors, such as the Federal Reserve increasing interest rates in the economy, and in the coming months, this could scare the market, but it will provide a great opportunity for investors for us to invest into our high conviction plays as long as we are not already overexposed to them. I find Sofi stock to be a very intriguing play because they basically offer every financial service that I can think of through an easy-to-use finance app, which has gained traction due to its ability to invest into crypto and stocks. Sofi's products and services, along with their comprehensive all-in-one app, has increased the number of members to 2.9 million, which is a 35% increase in Q3, so we clearly see growing demand here. We also saw an influx of members due to low interest rates in the overall economy for people refinancing their student loans or their mortgages. With their members growing and their customer base growing day by day, this is drastically increasing their cross-selling potential, which basically means if a customer comes in to refinance student loans or a mortgage, that same customer is also going to use another Sofi product, such as a Sofi credit card or even their brokerage services, and this is all a part of Sofi's ingenious business model. I would say that Sofi has a very bright future ahead of them, and I also want to point out that Sofi has great customer retention numbers, which means that once Sofi gains a customer, that customer will continue to use Sofi products and services without looking elsewhere. Sofi also has superior underwriting capabilities compared to other financial institutions because other institutions have long underwriting processes and procedures before someone is approved to get a loan, and during this process is when customers are very likely to leave because it's taking so long and they're getting impatient. However, Sofi, on the other hand, has fixed this problem overall, and they can do this very quickly, which prevents angry customers from leaving, and it also increases customer retention as well as customer satisfaction. I also want to point out that Sofi is anticipated to bring in $1.5 billion worth of revenue for fiscal year 2022, which equates to a 47% growth rate, which is outpacing traditional banks by a long shot. Currently, the Sofi stock price trades for around $14 per share, but their fair value price and fair value estimate is $22 per share. So this means at minimum the stock is undervalued right now. But what do you think? Comment your thoughts down below. Remember to like this video right now, especially if you haven't already. Subscribe if you are new, and I will see you in the next YT video.